Warriors, we have a busy week, and I want to give you a few things to think about into this busy week. With Jay Powell's going to make a speech. We also have his favorite inflation indicator, the PCE, and then tie it all in a bow with the NFP on Friday. So here's what I'm watching. Okay, so the title of the show is Possible Double Bottom in US dollar yen and the DXY. And the DXY has not made a new low yet, like the yen did. What's really interesting is this has turned. So now cable, if this is going to be a big move up in euro pound, it should lead to an outperformance of euro over cable, which is what's happening today. Euro's still up on the day, back at the double top. Pound had already cleaned out, made new highs for the move. Pretty impressive RSI here. So, I'm not going to do anything with either of these, but I'd be watching this US dollar yen, maybe on a third drive into the news that we have coming up this week. And I would wait for the dollar to take out this recent low here. And perhaps we, undercut it and get all the way down. Could we go all the way down to the demarcation line of the bull market and the dollar being over? I don't think so, but it could get close. We have to hold 1405 to keep the chance for at least a reflex, failing rally, and the bulls need it to keep the trend intact for another new high in the dollar. So watch this area, the 104s. Maybe we don't get down here, but there is a standout that I want to bring up. And you guys know I was bearish Canada up at 138. Okay, I talked about this head and shoulders top. It was a nice trade, with 600 pips. I didn't get all of them, that's for sure. But then we had a classic retest here of 135, came off. But while the dollar was pressing the lows, right here, Canada was putting in higher lows and threatening the breakdown again. So if we start closing over 135, there is a potential that it could rally to 138. That's just arithmetic. It's 132, 135. Tack on 3 gives you 38. And I think if we get that high to 38, Canada will make a new high. So this is one currency that is keeping the dollar bounce at least intact. The pound may be rolling over here. I mean, we went right to the 200-day. So the way I'm going to play with all this news is I'm going to see what happens when we get, first of all, I think Powell sound hawkish. I don't think he's happy about the S&Ps being up in his face right now. But I do want to, call your attention to the S&Ps are actually lower with the dollar trying to fail a double bottom. So this is not a great sign. You know what I'm worried about in risk is I think we have what makes me nervous is extreme complacency here. Okay, we have extreme complacency here. And that sets the market up for, say, we don't get a good PCE number. Say the jobs number is strong. And I'm going to give you what I think it could be the element or the sector of the market that people are now off sides on. Most people are agreeing that yields have peaked. Okay, so maybe the long bond has, but if we have some type of number between the NFP, the PCE, or Powell's statements that takes us out of this falling wedge, I don't think the market's ready for a new high in yields going into sometime in the next couple of weeks. And if we come out of this wedge, that could happen. So I think there's some interest rate risk. And if that's going to happen, it should be supportive of both US dollar yen, US dollar CAD, basically the dollar. So that's really something I want to make people aware of, is people are saying we're at peak inflation. The bonds are moving out of recession fears, but yields could make one more run towards the highs, up towards 440, 450, and that's going to pressure a lot of assets. I can't see any currency doing well in that environment. We'll see what happens. The dollar should rebound. If I'm right about this, it'll be just a matter of degrees between the different currencies. So I wanted to show that to you guys, and some quick coverage of the metals. I'm still bearish against 22 here. So far, this could be corrective in silver. We came off it pretty good, about $1.70, and we've rallied 80, 90 cents off this low. It's trying to hold. Closes back over 22. My shorts are gone. I think that there's still a chance for lower numbers, and I'm still predicating it on this falling wedge in the gold silver ratio. Maybe I'm going to have to go through some more drawdown, a little bit more pain with the market going back to the bottom of the wedge. But I like this confluence here. And if we do get a breakout in this falling wedge, which really does kind of mimic the dollar, that should make silver underperform gold. And right now, gold has tried to rally. Right here is going to be a big level that we held. That was like a triple bottom breakout that we held last week. Through there, well, I think we'll see the major breakout of the trend and the big pivot that did a lot of work in around that 1680 level. So again, if yields make that move, the whole market is predicated upon that. I'm thinking the market's offsides right now on their view of peak inflation, which will put into question peak yields for one more blast. So that's my take. I think that the S&Ps are right up here against the 200 again. Almost seems too pat for it to work, because that was a big trade against the 200 back in August. For a long time, we were talking about, 4140. Let me look at a 4-hour. We've had two drives here. Maybe towards the end of the week, we have some type of 3-drive formation. See how it looks here. Yeah, I think we're going to have a chance to be a seller there. There's a nice candle on the 15-minute. So those are my calls. That's the way I see it. Pay attention to yields. I think you could be patient if you want entries on the miners too, as well as the gold. Miners aren't doing, I don't think, that much. This is a pretty big break, and this is the silver one I paired, which was okay. This one I paired a while ago, and it's, I'll need a big break in silver just to see, 280, 260 again on this. The golds are still, this one's ranging, trying. Maybe it holds another break here. But the key is Newmont. We have a couple of days left in the month, and I am designating Newmont Mining wins the most impressive candle of the month. Drum roll, please. There you go. You certainly know where you're wrong. And even a correction in this stock from 85 to call it $45, halfway back, should get you back to 55, 60, right? Okay, and if you're long-term bull in gold, this could be the month that, as time progresses, ends up taking out the high that we had last year at 85. Boy, that was a nice 3-drive. Where were you, Dale? Here's one. Look at the, while I have it here, this is textbook, okay? So just, I'll teach a third drive for the 3 millionth time. Here's drive 1, confirmed high, pullback. Here's drive 2, divergence, but still a shade under over 70, which isn't ideal. Pullback, and then even with this blast off, the fact that they reversed it up there, 66 reading. So you have your 2 divergences and a 3 top, 3 drive to a top, happens inversely on bottoms. That's your trade with coach, 3 drive to the tops and bottoms, 1 trick pony. I talked to a guy the other day, a good trader. He said, you know, you only need 1 setup that you can rely on. You really don't need to have hundreds of them. And I said, well, then the issue is to have the patience to wait for them, because they take time to manifest and set up. Anyway, this is pretty classic. Take a screenshot. You'll see this in across all asset classes. You'll see the same RSI structure. And, you know, try them out. Try them out on a TradeView demo. I'll coach you if you're having some trouble. All right, so that's a wrap. Mike's going to be with everyone in an hour and 20 minutes. Tomorrow, oh, we're going to have a full house because Dave H. Contrarian is going to be with us tomorrow. So I'll ask Dave with what's going on here. I know what he's going to say, but you know, we'll see what happens here over this week. I think that there's a chance, even if we get, you know, 1 more push up in, you know, the daily here, maybe we go 41, 41, 40, something like this, that there's a chance for a pretty hard hit. I mean, I think 10%, because people are also factoring that the dollar has peaked. And you know how I know that? Because sentiment has gone from 90% bulls to 42. So there's been a pretty big conversion. It's not a crowded trade anymore. Okay, it's not crowded after this advance. And I have to admit, it's not a bad looking chart in euro right now. This one looks overextended. Anyway, Canada's very interesting, closes back over 135. It's going to trap a lot of bears. So be careful out there, trade well, and don't just count your pips, count your blessings. See everyone tomorrow with Dave H. Contrarian, the super melt-up bull, and then the biggest bear you're going to see come out.